Let's head to Burlington, Ontario. Anne, go ahead, please.
Hi, thank you very much for taking my call,
Our
and
pleasure.
thanks to the lovely screener who was very, very pleasant.
Oh.
David, you recommended Shopify. I didn't listen. It's had an absolutely meteoric rise. Is it too late to buy it? Do you still own it? And what do you think? Thanks.
Sure.
Bye.
Thanks a million.
So speaking of themes, of course, one of the most transformational themes is internet commerce, and Shopify is right in the middle of that. Of course, they provide the plumbing to all kinds of small and medium-sized web-based retailers, and they just continue to grow. Of course, the pie is growing very rapidly. They have a very dominant space and continue to do very well. I think that people continue to underestimate this transition we're going through in the way that people do business. Shopify's revenue growth has been absolutely tremendous. So we own the stock. I think the hard part about investing in growth stocks is they generally always look expensive.
Yeah.
And so if you try to buy them based on today's valuation, it's very difficult. So what we look for is the trajectory of the change in the numbers, and we're looking for acceleration, and Shopify has acceleration in a number of its financial characteristics. When that's the case, you can get multiple expansion. So ideally, you want to get a combination of two things in a growth stock. You want to get growth in the earnings and revenue, but you want to get expansion in the multiple investors are prepared to pay as they continue to execute, as they become more predictable. And Shopify is doing that. So I think we're getting it both ways. We own the stock. It's a significant position for us. We really like this whole theme. We're going to talk another company today in the same in the same space. But I would continue to buy the stock. And this is in the face of what has been a pretty sloppy market, sort of from the first week of March through until the last couple of days. And so we can continue to correct market-wise a little bit, but the tech sector seems to be doing quite well, and the plumbers for the internet are doing well along with it.
Dosanjh is calling from Surrey, BC. Dosanjh, go ahead, please.
Yeah, what's your guest view on Sun Life?
You got it. Thanks.
Okay. So Dosanjh, let me start with the sector. Financials, I think, is a theme that we are going to be focused on, all of us, for the next number of years, because insurance, banking, investment dealers all do well when long-term rates are rising. And we believe we turned a long-term corner on interest rates in June of last year. I think we reversed a 30-year trend to lower rates, and we are likely in fits and starts to see rates work their way higher over the next number of years. So the insurance industry really benefits from rising interest rates, but it's not going to be a straight line. So you own Sun Life because you like their asset management, wealth management businesses, you like the insurance business, but you also like the help they're going to get from rising rates. Now, in the last couple of months, long-term rates have pulled back a little bit. And so the whole insurance sector has been under some pressure. Frankly, it's corrected back to sort of where things blasted off in November.
Yeah.
And so some are doing better than others. I prefer Manulife to Sun Life. From a technical perspective, it's hanging on a bunch better. And we like some U.S. insurance companies. Pru is one of them. But I think you'll do well with the whole group. I would just prefer you look at something like Prudential or Manulife.
Yeah, I mean, as you say, the yield on the U.S. 10-year is now only 2.2%, and
But it was 1.8 before the election.
That's right, yeah, you kind of forget that.
Right? This is not going to go in a straight line.
No, but it did at one point get up to 2.6.
Yeah.
Quite the rally in bonds. Bob in Cochrane, go ahead, please.
Hi, I'm calling to find about Domtar Corporation. I'm wondering if their dividend is sustainable and what your thoughts are on it. Thank you.
Great.
Let's check out the yield on that one. Carry on.
So this stock has been quite erratic. It's trading quite a wide range. I can't tell you that there is a specific trend in place. If you take the forestry companies as an entirety, we track for every industry the percentage of companies within that industry that are where their share prices are behaving constructively. So in a healthy market over time, more and more companies should be performing well. That's not been the case recently in the forest sector. We've been seeing contraction in breadth. So we're a little bit cautious on the space. If I had to focus in one place, I would focus in lumber. which I think looks attractive. And frankly, you can buy a basket of the lumber producers by using the ETF CUT cut, which is behaving extremely well, trading virtually at new highs, and is a great play on the U.S. housing industry, which I think looks quite interesting right now.
God, yeah, I hadn't come across that one. I'm just looking at the big holdings. Not many Canadian, I don't see many or any Canadian ones in the top holdings. There's only 4% Canada, but Weyerhaeuser, International Paper, yeah. And the yield on Domtar roughly right now about 4.4%. Of course, they're trying to diversify out of paper and into diapers and hygiene products.
Right. The problem is, of course, we're all using less paper. So I think that there's less compelling long-term story here.
Alan's in Richmond Hill. Go ahead, Alan, please.
Hi, gentlemen. David, what is your assessment of Lithium X specifically and lithium in general? And looking at commodities, we know they fluctuate. To me, this seems like a long-term no-brainer, but what am I missing here in terms of a potential pitfall here where we could see some downside in lithium or Lithium X specifically?
No problem.
So Alan, I have to tell you, I haven't spent a lot of time looking at Lithium X. We are investors in the lithium space. It's a big beneficiary of what's happening with the proliferation of batteries and lithium batteries. We own Albemarle, which is a large cap stock. ALB is the symbol, trades in New York. And this stock is trading basically at new all-time highs. It was a recommendation I think we made last time or the time before on market call. It's trading stronger than 90% of the stocks in the NYSE. So very strong relative strength. I like lithium, and I look at it this way. When you look at a mining companies go through cycles. They go through a run-up as they're finding the deposit and delineating it, and then they go quiet as they build a mine. Eventually, as it's coming back into production, it has another run-up. Well, look, this gigafactory is coming into production. So it's like the mine is getting close to starting, and people are looking at all of the things that are needed for that mine. So realistically, I like lithium. We own Albemarle. I also own an ETF, which is LIT, which is a lithium ETF.
Okay.
And it owns a basket of both large and small companies, which might be a good way to play it, because the interesting thing is, in the case of Albemarle, they have 6 different major production facilities. They refine, they do all kinds of things. It's not dependent on one geographic region, even one type of lithium. I prefer to take that approach.
Yeah, I'm just looking at LIT, lithium and battery. Big players, FMC, I think that's another of the major
big chemical company. SQM, very large chemical company.
Albemarle's in there, and Tesla is the 3rd biggest holding at 6%. Yeah, and Panasonic, 4% of the fund. Interesting stuff. Yeah, it's interesting. We should probably put more emphasis on those commodities-related ETFs.
Right. So I'm going to today try to talk about individual names and then pose an idea for an ETF for those that like ETFs to get exposure to the space or the theme.
Good angle. Okay, stay tuned. Past picks coming at you next.